Hey, what's up, stock compounders? Brad here. So today I watched a video by Chamath. I'm not even going to try to say his last name. He's the CEO of a company called Social Capital. And he's really trying to put together something similar to what Warren Buffett built with Berkshire Hathaway. And he's trying to do it more with technology companies, which is something that obviously Warren Buffett didn't really venture into for the vast majority of Berkshire Hathaway. But Chamath did a talk last year, and he had some awesome points in the talk that I wanted to cover in the video today. He really talks about the power of slow compounding, okay, which is such a powerful concept. Particularly today, when it's very easy to think, it's easy to lose sight of kind of getting rich slow when there's just so much, FOMO, there's so much impatience to amass wealth. So I just want to talk about some of the points that Chamath made in this talk here. So the question he got today: what is one of the best ways to amass capital? Okay, that's what he was asked. He said, if you ask me who's building the most important indelible company in the world, it's Jeff Bezos with Amazon. Part of what he realized is the value of slow compounding. The faster you build a business, so the half-life is basically how long it takes to build the business. So, it's going to get destroyed in that same amount of time. So if you push on all cylinders and you build a great business in 5 years, that's about how long it's going to take to get destroyed. And it's counterintuitive thinking that way. But part of the resilience of a business is building it slowly and thoughtfully, and really putting all of the pieces in place to give that business a moat, to give it some competitive advantage, to allow it to endure for many years. And I really like that way of thinking about not just growing a business, but growing wealth, right? He says, amassing capital to me is about finding a smart, useful solution to a very hard, practical problem and being slow and methodical, okay? You have to rewire your brain for that to be okay. Particularly, he talks about social media and how, when we post on social media, we want that quick hit. We want that immediate feedback that people are liking what we're putting out on social media. And that behavior wires our brains to really seek those immediate feedbacks. And if we don't get them, it's very difficult to stay the course and build something slowly, not knowing how it's going to work out. So, he said, fast money returns can completely decay long-term thinking and sound judgment, right? So chasing that quick buck, it really works against our psychology of being successful long-term investors. And I thought this was interesting. He says, I would really love to compound at 15% per year. Because if I could do that for 50 years, and he threw out a figure, that's $250 billion. I'm imagining, he's basing that on what he's starting with today. But do the math yourself. In the video I made, the last video I made, I talked about, if you invest $2,000, or if someone invests it on your behalf when you're born, okay, age 0, by the time you're 65, if you grow it at 10% per year, you've got $1 million. So 2,000 to $1 million in 65 years. Now, if you take that rate of return from 10 to 15%, The difference is quite shocking. I think it was something like 17 million instead of 1 million, just by going from a 10% rate of return to a 15% rate of return. And Chamath here is saying, if you can do 15%, it doesn't seem necessarily like that much more than 10%, which is kind of the market average, the U.S. stock market average over decades. But 15% over a long enough period of time, I mean, it is magic in terms of compounding wealth. So, slow and steady against hard problems. That's the key. Start by turning off your social apps. He is so against allowing these social media apps to subconsciously wire our brains for that fast benefit, that quick hit of dopamine, right? Start by turning off your social apps and giving your brain a break. Discover your own motivation instead of chasing likes. What is it that I really want to build, right? Rather than just throwing things out there and seeing, what people initially like, right? And I mean, do they even really like it? How hard is it to push the like button, right? It's not substantial. It's not something that will endure. So I like that. Discover your own motivation. Social media wires your brain for super fast feedback, right? This is not the way to build a company, but it's the same brain, right? We use the same brain to, post on social and get this feedback that we use to build a company, that we use to invest, right? That we use to build our investment portfolio over time. It's the same brain. So even though it might be compelling to think, all right, I'm doing this stuff on social, right? It's harmless. It's not going to impact these other areas of my life, my investing, my entrepreneurship. They're separate. Well, they're not separate because it's the same brain. And what impacts it in one area of life, it's going to wire it in a specific way. And it's really important to understand how the things we're exposed to every day are shaping our psychology. And then lastly, we must do everything we can to rewire our brain chemistry to not be short-term focused. The reason people chase fast money in the short term is because we think that's the only way to make it. We think that's the only way to become financially free, become financially independent, is to, run full speed ahead at making as much money as possible, as quickly as possible. But, for those of us who understand the power of compounding, we don't need to hit home runs every week, every month, or even every year. We need to stay in the game, which means we have to make bets that have high reward to risk, right? Low risk of losing money. But we also have to have reasonable return expectations or, return ambitions. And, to me, 8 to 10%, it's a little weak. It's very difficult to get to the promised land with 8 to 10% annual returns. At the same time, trying to double my money in a month, that's probably going to get me into trouble. There's probably not a lot of safe opportunities to do something like that. But 15% per year, or even, Monish Pabrai talks about 26% per year, which is, doubling every 3 years, okay? So somewhere between that 15%, 25%, those seem much more reasonable to me, and achievable. They're a great combination of achievable and realistic, right? So yeah, really good talk. I'm going to link to this snippet. It was basically just a question that he answered in one of his talks from 2019. It's just like 4.5 minutes, and there's just so much good stuff in there. So highly recommend checking that out. I am getting much more interested as I learn more about Chamath, CEO of Social Capital, what the guy's all about. He has some very smart things that he talks about in some of the videos, the content that I've consumed from him on YouTube. So if you guys have any clips, any videos that you've seen with Chamath that you highly recommend, let me know. I want to learn more about him. I want to learn more about these SPACs that he's creating, that he's building. It's possible that he's kind of the modern day Warren Buffett. You know, I don't know nearly enough about him to say that with any degree of confidence. But clearly he has some great experience in the tech world. He was an early leader at Facebook. And he just, you know, I really resonate with the messages that he puts out when he does Q&As or when he does interviews, when he does talks. Because his goals seem very grounded in reality, but he's also a very smart guy, and he's not going to sell himself short or his ambitions short. So it's a really interesting combination there. And of course, the tech sector is, I mean, there's so much opportunity. It's really hard to spot which opportunities are, you know, worth swinging at versus, you know, likelihood of losing money. There's a lot of opportunities that are probably going to end up very poorly for investors in the tech sector. But he seems to have a pretty good track record. And yeah, I want to learn more about him. So let me know what you guys know. I know I'm sure many of you follow Chamath. So anyway, guys, that's all I wanted to share for today. I hope you enjoyed this. Again, I will link to that clip from Chamath in the description. All right, guys, take care. I will see you in the next video.